Okay, action.
Okay, so welcome, thank you for coming to the second session of Blockchain Fundamental series. Today I'd like to present you some properties of the blockchain that we already see last time, but we'll go a little bit more in depth. And I figured we can talk also about mining, because it's a core process inside the blockchain that creates security. And before that, I know some people are interested in how to invest and things like that, so we'll put a couple of slides on the market just to have an overview actually. And this this market, this technical stuff will be still the basic understanding of the blockchain. In general, we'll still use Bitcoin as an example of implementation of the blockchain. So it will be a basis for us to understand also what's in the wallet later, what are the public-private keys, and then in the following session, I shall more focus on Bitcoin actually. Okay, but of course it's still subjected to your feedback. So because people were talking about investment and all, I include some of the market overview, very high level, very quick. And if you want maybe more of that, you can always give me some feedback. So that. So this is a 4-quadrant model inspired by Michael Saylor. And hello.
Hello, j'ai le grand nombril.
Ok. Je croyais que c'était un invité. So basically, the whole marketplace of crypto and cryptocurrency could be divided in 4 parts: the digital properties, the digital currencies. Actually, there is a lot of confusion about the word cryptocurrency, because many of the cryptocurrencies aren't actually currencies at all. So it's good to clarify that point too. Hello. And then we have decentralized platform and applications. Maybe we can just sum it up. Yes, maybe next word. Next. So if you're in Geneva, for example, and you're given, for example, $10 million, what would you invest in, right? So you could invest in land, maybe a building, or something else. So if you invest in land, for example, you have a very stable investment that could last more than 500 years probably, and it's very low risk and very high upside probably. But you could also buy the local currency, like the Swiss francs, for example. There is not much upside to trade your dollar for Swiss francs, as you're pretty sure that it will lose value over time. So no upside here. But you could also buy a building, and this will have a different risk reward pattern, right? The building will have medium risk probably, and this investment will have different like operating frequencies or lifespan, if you want. So the building will probably last 50 to 100 years, useful investment lifetime, medium risk, high upside too. But you could also buy companies, right? So you could invest in stocks that are companies that are inside those buildings. And here you will not have probably a company that lasts 100 years. You will have a company, if you're lucky, your investment will last like 10 years or probably less. Maybe higher upside, but much higher risk also. So why I'm talking about those things, just to draw a parallel with the world of the digital realm, right? So if we talk about property, what is property in the digital realm? Well, that will be Bitcoin, right? You imagine you own a block of city in the city center or near Geneva. It's basically optimized for durability and integrity. So it can last hundreds, maybe 1,000 years. And if you own land like that, you could either lend it out, or how do you live out of it? You can lend it out for someone who will pay your rent, and you can get a rent, or you can finance it. Okay, so as the property increase in value, you can refinance it possibly. You get credit, so you can use that cash for your spendings, and that's pretty smart because as the land increase in value, probably you will be able to do that forever, and this money will be probably tax-free because it's debt, right? So Bitcoin is the king of the digital property. Then, if we talk about the currency, that would be the stable coins. Okay, that's the one that, in my view, we can really call cryptocurrencies because they reflect directly the national governmental currencies. For example, Tether is the most widely used. It represents the US dollar, but you can buy other stable coins. You can even buy crypto Swiss francs, and there is no much upside to buy those. It just adds a layer of risk basically because it only represents the underlying currency, and as the government print the currency, they lose in value and the stable coin too. Okay, but it's still an important thing because everybody needs a currency, and the stable coins represent basically the medium of exchange. Okay, so the currencies are the medium of exchange, while Bitcoin is the store of value, long term. And what would be the equivalent of the building, in your view, in the digital realm? Anyone has an idea?
Server.
Sorry?
Server.
Server? Yeah. So that would be like it's an infrastructure, right? So it will be the infrastructure blockchains, like Ethereum, for example. They don't really do anything on their own, but they allow other application, other things to be built on it or within it. Like on Ethereum blockchain, you can even create other tokens, for example, or decentralized applications, smart contracts, and things like that. So those will be the infrastructure blockchain, okay, digital platform. And what would be the equivalent of like buying companies? Well, those will be the actual applications, right, that are built on either on the infrastructure blockchain like Ethereum, or they have their own blockchain and to build a decentralized application. Okay, so those ones try to replace, for example, hello. Yeah, feel free to. Yeah, let's make this face me. Yes. Good. Could you just close the door behind, just for the noise? Yeah. So the applications that are decentralized, they basically want to replace, for example, Binance, or centralize some application, or maybe they want to build decentralized social network, or this, or like DeFi, decentralized finance. Like Uniswap is a way to swap different coins between them, and those ones are the equivalent of, let's say, a company. So that's how you can see it. I also wanted to give an overview of the price. So the price of Bitcoin just kept growing from 0 to $2 trillion with a coin with a Bitcoin at 100K. So that's the first observation we have, and that's why it's a great store of value. It's been the best performing asset over the course of the let's say 15 years or a bit more since its creation. But the other observation is that it grows not linearly, it has a lot of volatility. Okay? So as you can see, there are peaks and downs, but in average, it just keeps growing. Okay? The volatility, the message that I wanted to put is not something to be kind of afraid of, because it's mainly due because the asset is very young. So as the capital enter and leave, it shakes the market price, and this is something that is totally normal or expected. Okay, especially for a young asset like that, there is a lot of traders or speculators that will use leverage to trade Bitcoin more or less short term, and this creates a lot of volatility. And this is something totally normal and expected. But in average it grows, and the other things is that this volatility, which is basically the change in price up and down, tends to decrease. And this is something that is actually also expected. Okay, as the adoption grows, it is expected that as the market cap grows, that the flux in and out of the network will impact less the market price. Okay, but I couldn't put this slide without talking about some kind of cyclicity that we can observe also in the ups and the downs, because it seems that there is a kind of 4-year cycle that seems to be to correspond to what we call the halving. So what happens is that every 2016 block, if I remember, we have what we call the block reward for the miners.
200,000.
200,000, oh yeah, which is equivalent to around 2,000 would be not, which is equivalent to about 4 years. So we started with a block reward of 50, then it went to 25, 12.5, etc., etc. Now it's at 3.125. We'll talk more about mining. You will understand better by the end of the session. But what we kind of observe, we cannot predict that it will be the same in the future, is that around the halving there is a huge increase in price, in market price, then it kind of reach top and then it decrease toward a very low value, but still higher than what it was before this increase. So we can see 2017 increase here and here also. Okay, I really like during my teaching to kind of give the message to keep the learning the fundamentals and keep the higher picture, and not enter into the kind of trap of the short-term speculation, news, and trading Bitcoin. As you know, it keeps going up in price, and for the moment, every let's say news or fundamentals don't predict at all that the trend will change. Okay, so it's not really worth to stress about each modification. You know, like very recently, like we had a drop in the Bitcoin price, and this drop is literally this millimeter that you can see here in March. And here a lot of people asked me like, "Hey Victor, what do you think about this crash? Will Bitcoin die?" You know, and then you're like, "Yeah, don't bother, don't listen to the noise. Just learn the fundamentals." That's kind of my view, my message.
Can I
I have the yep.
So on this chart here, do you have a sense over time of how Bitcoin transactions, not for other cryptos, but for goods or services, has increased or evolved? involved?
I
My
have
sense is that
no.
most of that's all just parked.
Yeah,
If you
actually,
look at
I don't really like to talk about the price. I think just people kind of need it, so I'm doing this for the reason I'm telling you. What I prefer to look at sometimes is the adoption of Bitcoin or the new addresses that are created on the network. So this curve for me is a little bit more representative of what we should look at, and it looks really nicer. And of course, the number of new addresses, the total number of addresses are not representative of the number of users exactly. But for me, this is what users do. They create address to receive Bitcoin on them or to send Bitcoin to them. So as long as I see this curve increase, it kind of make me feel good that the adoption keep growing. And this is more important than the market price at one time T.
Can I apply the same question to this graph then? Do you have a sense of, so like uptake of creating accounts isn't indicative of how much Bitcoin is being used for goods and services transactions? And I'm curious to know how many people
But-
are using Bitcoin.
I mean, it's how do you define goods and services? Like every time you make a transaction, I mean, especially at this point in time, if you send some Bitcoin, I mean, either it's for educational purpose, which should be a very small amount, but all the rest you send Bitcoin for something. So it could be either for buying, for trading and things like that,
But
or
that's
for
the
buying
question,
something.
do you know what the difference is between like trading transactions and kind of participating in an economy?
I'm not sure if you can measure that, to be honest. Bart, do you have an idea?
I have an idea that is not possible to measure. I can give an example of myself. I'm using travel agency called Travala.com for buying all my tickets for the planes, booking hotels. And I did about 100 operations last year, and for all these 100 operations, there was only one single on-chain transaction because I opened Lightning Node, and every single transaction was paid on Lightning. So you cannot see it here because it's outside of the blockchain.
Ah, that's a good point also. So there is a whole network, if you will, which is there is a kind of second layer where Bitcoin can be transacted, still in an anonymous way, still with the benefit of Bitcoin. It works a little bit differently, but it's much faster. And there you have a lot of transactions that are actually not recorded here because it doesn't create new addresses on the main chain. Okay, so that's why the Bitcoin blockchain can really be seen as this base layer, the ground, the field or the land of the digital space, and consequently the land of the distribution of value, and consequently the basis of the digital economy, and by extension by the economy. So it's really something that can be seen as the rock under what we build. Okay, so that's my message.
May I ask you a question on this secondary layer, which was just mentioned before?
The Lightning Network,
Yeah, which is kind of a secondary market in a way for the primary market, right? Now, how scalable is that second layer, and is it possible that one day it will be able to digest as many transactions as, say, credit card operators?
Yes, it could be much more, because the main chain can transact 7 transactions per second. On the Lightning Network, the credit card, I think it's something about 20,000 transactions per second. It's much higher. But on the Lightning Network, I think you can go to 1 million transactions per second. So it's already like 5 times more faster. I mean, more the volume is 5 times more larger, basically, than the credit card. So I think yes, I have good about that. In terms of scalability, yeah. Sometimes people worry that the Bitcoin blockchain is too slow or the cost of transaction is too high, we can't buy coffee with it. But thanks to this second layer, we can keep the transaction on the main chain maybe slow, maybe a little bit more expensive, but very, very secure and very sure. And then we can, on the second layer, we can trade a little bit of, let's say, security for small transaction, but at very fast pace to make every transaction very fast. Just like you make a hardcore, I don't know, banking transaction to buy a house or something, but when you go to the discotheque, you just take some cash in the pocket maybe, and if you lose 50 bucks, it's not a big deal. What?
Excuse me, you said that this is the most performing assets in the world?
The best performing asset in the last 15 years, and probably the best performing asset in the history in the world.
So if that's the best performing assets, why
Hello.
should people sell it and use it as currency?
I never said that. I think we should never sell it. Thanks. But actually, that's my quick answer, and it's personal. But the longer answer is, as you learn about Bitcoin, you learn how it works, and you have two possibilities. Either you don't find value in it, in which case you abandon. Some people will look at the curve, they will say, it's too good to be true, it's a bubble, next. And some people will say, maybe there is something there, so let's learn about it. And if you learn, either you find that it has a great usage or for the society in general, in which case it's probably something that is worth investing in, or you helplessly, desperately need a solution for your problem, and also by learning you find that Bitcoin can solve your problem, in which case you value it. And this is when people make the decision to buy some, not because of the price, but because they need it or they find the need in the world. And yeah, for example, a lot of governments are in hyperinflation, or but then we enter into politics and all, but you have a totalitarian regime, you can't live with your asset, or you get your assets stolen. Bitcoin is something that could be very useful in that matter. In countries like Switzerland, it's probably less those type of threats, but still we have inflation, and still we are under threat of bank failure. We saw this with Credit Suisse, and okay, I could talk 2 hours on that, but it's not my main tool. But just to finish with that, I found interesting to measure the stock to flow, which is basically the ratio of the whole stock of Bitcoin versus the new stock that comes in a given year. And officially in April 2024, this stock to flow, which measure actually the scarcity, because it compares what we have with what the new units are in a given year. It's higher. It became higher than the gold, which is about 70, and the Bitcoin stock to flow becomes 120. Yeah, so it's the scarcest asset than gold.
Can we ask question? Or?
Yeah, sure. It will be a bit longer, but
Okay.
if nobody says.
Do you think it's a good way to diversify our portfolio of traditional assets? Like to have some Bitcoin, do you think it can...
Yeah, I think it's kind of, from what I said, I think it's, in my personal view, it's kind of obvious. But again, I'm not here to predict the price of Bitcoin. So some will say it's good to have a little bit just in case it grows up. And some hardcore Bitcoin maximalists will say go all in, don't diversify, because if you diversify, you basically lose and win and you are average. Just buy and hold, and this, if you come to the conclusion that Bitcoin is the basis of the digital economy and the world economy, then buying Bitcoin is also a form of diversification because it impacts potentially all areas, all markets, because it's such how to say, basic asset or asset that is at the basis, like land, you know, it's something that is not expected to change for a long period of time and on which we can build. So yeah, it's like land. When is it a bad idea to own land, you know? When do you sell it? Like never, you know? Like if you have good land in good location, you probably don't want to sell it. And how much you diversify it? Well, on land you build buildings, you build company. When will we stop using land as human? You know, it's like you know, you don't really, yeah, you just buy the underlying asset. You know, if you want to grow your wealth.
People are saying that we can have a little bit of Bitcoin in the portfolio. What is the percentage actually that they advise to have?
It's like, you must ask this guy. He's the financial guy. I'm just the geek guy who just buy and hold and never sell.
In wealth management, they say 2 to 5% is a good spot. And as I said, Bitcoiners are going to say at least 20%, but that's, I mean, it's based on your level of knowledge also. But it's better to have some than zero.
I mean, we are 100K. When the curve will be here, we will be at 1 million because it's a logarithmic scale. And like, how much? What percentage of your portfolio would you have? Would you like to have today, when in I don't know, 5 or 10 years, Bitcoin will be 1 million or like 10 times more? Like, it's like you know, like Satoshi said, I think something at the very early beginning. It's maybe worse to own some just in case it picks up. You know, I guess that's still hold true. And he also predicted one thing, that in 20 years, so we are almost in 20 years actually, Bitcoin will be either worth 0 or it will be huge. And well, it seems to me that the second theory is rather right here, it seems to me. But of course, we cannot predict the future.
May I ask you a question? You basically said, you made a comparison with land.
Yes.
To me, like, play a little bit the devil's advocate to what you just said,
Yes.
to pick your brain a bit.
Yes.
I mean, the difference is land is, it cannot be substituted. There is only land, right? You cannot create land out of thin air. But with Bitcoin, you can create new protocols. And my big question, and which to me is still unanswered today, is how come there was not another protocol which was created, which basically took over the role or started to substitute away the Bitcoin technology? How come? Because there are many other protocols which, and even other coins like Solana and all these other.
Yeah. So land is
Right.
scarce. Also, we kind of can create it if we can Dubai, they can create land. But let's suppose we cannot. Bitcoin is a protocol. It's the protocol. If you create another protocol, it will just be another protocol. Bitcoin will remain scarce. It's like you have Miami Beach. You can maybe have some other land, but Miami Beach is Miami Beach. It will stay Miami Beach, even if you create other protocols. The other protocols, you mean other blockchains, basically, right?
Yeah.
Very independent thing. So you will basically talk about those applications, eventually some stable coins, right? Or some infrastructure blockchain that use some coins. Talk about Ethereum, etc. Will those kind of compete with Bitcoin? That's the question, I guess, right? Anyone has an idea for that?
Bitcoin Cash? Bitcoin Cash?
Yeah, I think it's a good example because it's not even it's a fork of Bitcoin, so you can either fork Bitcoin. Actually, a lot of other cryptocurrency are fork of Bitcoin. They are much inspired from Bitcoin, but Bitcoin will always keep his uniqueness, and he's fundamentally different from the crypto world. So that's why we say sometimes Bitcoin, not crypto. And there are good reasons for that. For example, the fact that Bitcoin is classified as a commodity by the Securities and Exchange Commission, like a commodity, and it acts like gold, while all other cryptocurrencies or cryptos are basically founded by a founding team with a company behind. They are not neutral anymore. Okay, so this gives some aspect of Bitcoin that are fundamentally really hard to replicate. Okay, the guy or the group of guys who created Bitcoin remain anonymous to this day, and nobody controls the system. It's totally decentralized. So I guess that the answer how you can compete with someone that doesn't exist. Like how do you compete with gold? Like you cannot create a company that competes with gold, because gold is a bare asset that is created from nature, and Bitcoin is this green field kind of enter into the realm of nature, physics, and mathematics. It's very hard to compete with something like that, with a company or founding team that do some distribution of shares that is non-ethical from the beginning, while Bitcoin was always ethical from the beginning. It doesn't have this early stage scene, if I want to say so. It was just given to the world.
In my understanding, the most important attribute is that it cannot be, the supply cannot be increased, which is due to decentralization.
Yeah, exactly. I mean, as the supply cannot be increased, I think it's a good argument also. Like all others, because of centralization or because of the protocol, there is always the risk that the supply will increase or the protocol will be changed, because it's created by people, and Bitcoin kind of was created by people, but by anonymous people, and now it's not owned by anyone. So the fact that we have it's the actual only asset that is scarce and with limited supply, and we know that humans value the limited thing, the scarce thing. So it's very hard to replicate that or to overtake something like that. Very hard. But we can study that and yeah, convince yourself about that. Okay, last graph before we start. Okay, that's just I was talking about the scarcity. So you can, that's actually the very interesting thing about Bitcoin, is that the supply is totally predictable. Okay, so it's not like we have 21 million coins. They are produced. We still have a kind of inflation rate, but it's mathematically hard coded, and because of the halving, it's always smaller and smaller. And now we have mined around 90% of the Bitcoin, and in 10 years, around 2035, we will have mined 99% of the coin. And some believe that during the 10-year period, it will probably be a sort of gold rush to get the remaining 10% of the new Bitcoins, namely with institutional and government adoption. And then it will be harder and harder to acquire them. It would be, very. Okay, so do you have any question about like market or price or something like that? Or we can continue with our happy topic, yeah?
There's something I've been trying to wrap my head around for years, and it's, I heard many years ago someone referring to like the fiat economy versus a crypto economy or Bitcoin
Yeah.
economy, and that one of the main differences that isn't often talked about, but which is very consequential, is that in the crypto or the Bitcoin space, the capital doesn't work, it just sits there in theory.
Mhm.
And in a fiat economy, the money is constantly reinvested, and so there's a multiplier effect. And that if
Okay.
the crypto economy were to take on too much of the fiat economy, there wouldn't be this, because essentially the economy is a pyramid scheme all over the place where the
Yeah.
money is constantly moving, which is not. Do you have? What are your thoughts on that?
Okay, so the question is it an issue that we have some pool of value, money in a Bitcoin form that that is growing and that is sitting there without being reinvested because we cannot really create like fake money to invest? Is that the
I think so, because our economy is largely like kind of pyramid scheme investment based.
Yeah, yeah. I mean, then it's an economic thing. Some people will try to convince you that it's good to issue some fake money, to print them, to invest. And some say that nothing is free. If we spend money, like taxes should equal expenses from a government point of view, because only government can print money. So that's something to study, I think. That everyone should see the impact of printing money and really study it deep because it has a huge impact, and really imagine a world where we actually cannot print the money and see the impact of
Or
something.
where there's where banks aren't using idle funds
Yeah.
to reinvest
Yeah.
over and over and over.
I mean, in the first session, there was this introduction of Joe Bryan, and he made this video, What's the Problem? And he really explained with a little story that's nice. Two worlds, like a ship is going into a desertic island, not desertic with resources, but without nothing, and they have to rebuild society, and they decide to make a perfect money, and then they decide, others decide to make a perfect money, but with the ability to print some. And he really explained the difference and the impact of printing, which is quite negative. Yeah.
It's not about printing
We can
money.
still,
It's not about printing money. It's about using existing funds to reinvest in projects over and over again. But it's a different. It's not about printing money. It's about using existing currency to just help.
I mean, nothing. I don't see why we wouldn't be able to invest. Why you associate Bitcoin with not being able
Well,
to
maybe
invest?
that's my question. My understanding is that it's not possible or it's not part of the vision. But that's what I don't understand.
Yeah. I don't know. You have any
I think
idea on that?
usually-
You're the investing a specialist. Yeah, you wanted to react?
In such in the case of such a question, I usually compare it to gold. If you had gold, it's very similar. And many years ago, maybe 100 years ago, people economy worked with gold, and it worked. I mean, it does work. If you have
Yeah.
something that cannot be inflated, or
I mean, you can invest in Bitcoin increasingly, especially as the Bitcoin economy and the people who accept Bitcoin as payment increase. And if they don't, you can always trade it for some currencies.
As an individual,
And you can
on an
still
institutional
invest.
level.
So
It's okay, we can have a sidebar after the presentation.
I mean, what you want to spend or invest, it's like or buy stuff, right? Buy useful stuff. When
No, I'm
you say
talking about,
investing,
no,
it's
I'm
like
talking about like government funding into social housing when they're using funds in banks to
so you're not talking about consumer, you talk about
I'm
institutions.
talking about kind of fundamentals of the economy and how states spend money and what they invest in, not individuals, it's more institutional.
Yeah.
Because that investment capacity seems to disappear, but I don't understand.
Good point. But for hundreds of years, we had a gold-based economy, as you said.
Yeah, but that was way before the development explosion of the last 75 years. Like, those are totally different economies. They're not the same.
Yeah, I'll think about that maybe next time we have to go because then it's economy.
Yeah, but maybe I think one of the points which maybe was mentioned without really mentioning it is that if you buy real estate bonds or stocks, you have a dividend or you have a coupon or you have some rental income, and so you got at least the way to gauge the fundamental value. You know, if you buy an apartment here, you get this amount of rental income. Here, the only way to make money is to sell it to a greater fool or to an investor who believes that it's still going to go up. I think this is really the main difference between Bitcoin and dividend, coupon, or rental income yielding assets. And so you have to believe that the people will have faith in Bitcoin, that it will continue to grow, because if that thesis stops, then basically you sit on something which is not income producing. I think this is, one has to have the intellectual honesty to admit that there is just no rental income, there is no dividend, no coupon, just like gold, and you know, it's basically the whole thesis is based on the fact that the adoption continues, and if the adoption stops, then the asset becomes useless. And if the adoption continues, then of course it's going to be great because the price will continue to increase.
Yeah, I think we really need to stretch a little bit our mind and look at the fundamental needs of human, which is storing value, which is basically agreeing on a store of value. And today, half of our global market is used to store value. And we have a big villa in Lac Léman that are completely not used, they are empty. We have housing that grows in price, and those are there are stocks that just follow the inflation rate. All those things are bought because we need to put the money somewhere, buy something, with the hope that we don't lose it. So we are kind of forced to invest in something that we believe, and you said it right, it's a kind of common belief on the right store of value, and it's kind of decorrelated from the reality. All this housing price that grows in value, they are often not used, so they're obviously not priced for the utility. The only utility is the common belief that the price will not drop. It's the same issue basically with other assets, and gold also, right? The utility of gold. That's one of the presentation I did very early. It's a common belief that it's a good store of value, but it's not based on the utility for 90%. And most of the stores of value are priced for this sake, for this common belief that it will not drop in value. So it's actually good to have at least one asset that has no utility value at all, so we can concentrate all this common belief on what is the best store of value, which is essentially an incorruptible, immutable database that we just agree on, and that will be kind of the way we synchronize humanity on the distribution of digital land. You know, so that's the idea. And to understand how this is even possible, maybe let's talk about the actually functioning of the blockchain, which is my main topic. But maybe we don't have time to finish. Let's keep. Oh, okay. Actually, I didn't put a limit, so it could be. We'll make a break or something, and I don't know. Actually, I should be able to finish in 1.5 hours. I mean, in total. Okay, so who was here in the last session, the first session? Yeah, you. Who did read the notes of the first session? Okay.
Okay.
So that's good because I remind some of the concept. So for those who were maybe last time, do you know the difference between a decentralized system or a distributed system? So the centralization and decentralization part refer to the governance model. So it's a way to say whether the authority and control is spread among participants or centralized in one entity. While the distributed part refers more to the technical fact that we have our data spread among different nodes. So we can have a centralized entity could choose to have various nodes and have a distributed system that they would control all the nodes. Bitcoin, for example, is an example of both decentralized and distributed system. Okay, that's that's one point. Then a blockchain can be also permission or permissionless, and that's also an important concept. I will go a bit quicker, but you know that Bitcoin is a permissioned blockchain or permissionless? What do you think? Permissioned?
Yes. No.
Permissionless.
Permissionless.
You don't need permission. You can access it without permission, okay? The permissioned one, usually you need to request a permission from someone, so it's centralized. The permissionless can be decentralized. But the permission, because of centralization, it's much faster usually and scalable. The permissionless part comes at the expense of being maybe slower and having higher processing power required. In the permissioned blockchain or system, you have less privacy also because you have to identify yourself to a third party, which is not the case for a permissionless blockchain like Bitcoin, which is pseudonymous. In a permission system, you have someone who manages the basically the addition of new data, etc. They don't need effort to do that. Usually in a permissionless system, you need some kind of consensus agreement with an incentive mechanism that will permit the synchronization of data in a decentralized system. In a permission system will require approval, while the permissionless is totally open to anyone to enter the network. Okay, so that's the permission versus permissionless. It's when you see different crypto or different blockchain, those are concepts that are important. Okay, a blockchain is usually like append only. You can add data and you cannot remove them. You cannot modify them. Okay, that's the immutable part of it. Okay, I can write, I cannot remove. And I wanted to go a little bit further into this concept. So the blockchain is for is basically why do we call it a blockchain at all? Actually, anyone remember or want to explain why we call it a blockchain? Or what a blockchain is in terms of data organization? Talking about that in the first session a bit. So it's basically a way to structure data, block of data. So you can imagine each page. And we add block and we link them together cryptographically. And the way we do that is basically we take what we call a hash. We are hashing all the data of a block. We kind of digest it in one identifier, one number that is really specific to one block. And then we add this identifier inside the data of the next block. That's all it means to have a chain of block or a blockchain. They are not linked physically to each other like we're going to represent them. It's just that an ID of the previous block that is specific to the block is present in the next block. So it creates something important, because if someone wants to tamper with the data and modify the data of one block, the hash depends on the data of the block. So it would modify the hash, but then it would not correspond anymore to the hash that is supposedly in the next block, that supposedly has the hash of the previous block. So it will modify the data of the next block, and so it will modify its hash, and basically one bit of change in one block of data will propagate and will change all the blockchain, which obviously will be seen, and that's how it will be rejected by the network. So we keep tightly, and that's one of the part how we can maintain things immutable.
What's rejected, the transaction?
No, the blocks, the blockchain. Let's say you are a node, you run a computer, you connect, because
Well, let's say I'm a hacker and I change the data in one of the blocks.
yeah.
What happens?
Well, you can propose this. If you change the data in one block, you can propose this new blockchain, because it will modify the whole blockchain, basically, the whole data, and everybody will reject it. If you add it on the last one, then you have to have a valid block. We'll talk about that later, and you can still have hope to kind of mine a buggy block, or an empty block, or kind of not dishonest block, and try to impose it to the network. The thing is, in order to modify the data in such way, you still have to have this consensus between all nodes. So it will be very hard to impose a blockchain that is buggy, and this is exactly, we later simulate basically how we can hack the system, and we will play ethical hacker and see what it takes to make an attack on the Bitcoin blockchain. So I will do the simulation later. And this is the consensus I was talking about. So the consensus mechanism, as I tell you, because this is not sufficient. I mean, actually, it's a very good question. I can do that locally, but if everybody does that, we all have a nicely chained blockchain, but we still need to agree on one true blockchain, which contains the transactions. Basically, they contain the data, who sent what, how much to who. So it's very important that every node agree. And this is the consensus mechanism that does this, which is called proof of work for Bitcoin, which allows that consensus to happen, and in an environment that has many nodes, and the nodes don't need to know or trust each other. Okay, so the blockchain is revolutionary in the sense that it creates security and trust in a pseudonymous environment where everybody don't need to trust each other, which create also another aspect of blockchain, which is the collusion resistant aspect. Because we are in a pseudonymous environment, it makes very hard for different nodes to collude and work towards a dishonest blockchain, or to break it. Okay. So in the traditional banking system, people and bank are identified. We know who sent how much to who. In the Bitcoin system, we don't need. We just have some ID, some addresses, and this is all we know. And in the first session, I talked about the Byzantine's general problem. The blockchain will be fault tolerant, so that means that it's basically resistant to outage, to crashes. Some nodes can crash. So the nodes communicate via messages. The messages can be corrupted, lost, delayed. And what Bitcoins create is the resistance, the fault. This is the fault resistance. But even more. Like the Byzantine fault resistance. It was illustrated in my the first session by generals that must agree on whether they attack or not the city. They can only take over the city if they agree all, but they don't trust each other. Okay, but that's what creates not only fault tolerance, but also attack resistance. And the Bitcoin blockchain was firstly designed for being attack resistant because actually the fault and crashes are pretty rare actually in a system that is designed for working, but the attacks, those are unavoidable. So yeah, so let's talk about attacks. I like that. So yeah, the thing is there is still a probability, there is still a theoretical way to attack the blockchain and the Bitcoin blockchain, if we talk about Bitcoin, is if we control more than 51% of the node. Like if we control 51%, probably hard, but if you control more than 50%, you can basically compromise the system. The system becomes centralized in a way. And this introduces a centralization issue, a point of failure, or simply a dishonest attacker could mess with the blockchain. So actually the slide is a bit misleading because you don't need to control the majority of nodes, you need to control the majority of what we call the hash power, the computing power of the network. Because as we will see, what's my next slide? Yeah, we have something called the hash rate, and basically as part of this consensus mechanism that helps the node to synchronize and have the same live version of the data, the transaction, the rules, the consensus mechanism is a set of rules in which that impose some work to be done. So you cannot propose as a node a block that hasn't been gone through a process called proof of work, which requires actually time and energy and computing power. And you basically need to have more than 50% of the computing power, and here you see how this computing power expressed in hash rate constantly grow over time. And this is kind of a measure of the security of the actual blockchain. Because the higher it is, the harder it is to achieve half of it. So now it's like a 900 exahash, and I crunched some numbers. Now we come to the hacking part. What it takes to hack the system. So exahash is one quintillion, so it's a lot of billions and billions of basically computations. And I tried to see what it would take to have 51% of this hash rate of this computing power. So first you need a hardware, which is called an ASIC, which is what's ASIC stands for?
Application Specific Integrated Circuit.
It's basically a program that is not hard-coded, but like literally burned into the CPU that does only this hash, this work needed for mining. So it costs about 5,000. Each ASIC will deliver 230 terahash. I have the consumption power of one, it's about 3,000 watt, and I have the global hash power, as we saw before, actually the stream is cutting the first, but it's 900 exahash. So I took those numbers, and basically, if I want to achieve half of the hash rate, I need to gather. Actually, sorry, I have to actually gather 900. Actually, it's million. Yeah, because it's in exahash. So exahash are millions of terahash. Don't get too much confused about that. It's just the total hash rate of the network. I need to have that. So if I add myself what is already on the network, then the network will double and I will have half of it, right? Or 51%. If each miners deliver 200, then it means I need over about 4 million ASIC, those machines. And each machine, we said, if it costs 5,000, so I will probably just need to spend $20 billion just on the hardware. And then it will consume about 14 gigawatt, which is equivalent to like 14 nuclear power plants, basically. And but of course I need to install them, I need to source them, I need to buy them from some company which are kind of limited. The hardware itself is a kind of scarce resources, so I need to manufacture them. It will probably take like 10 years, and just to get the system ready and connected and set up, building the facilities and all, it will also take probably many years. So that what would take a hacker to make a 51% attack, maybe not the only one, but the main, the true possible but improbable attack that can be made on the system. And even if I achieve that could be only done by a big coalition of governments, basically, because
Or one
people.
government, no?
One, yeah, maybe, but not likely. Like maybe one, if it's a big government, yeah, maybe. But that's why I say the taxpayers would need to pay that. And by the way, a hacker will need to do that quite secretly, because the whole network will react to something like that, and will probably identify the buggy mined blockchain. Yeah. So what's cool on the Bitcoin network around cloud is that everybody act honestly, and the dishonest nodes are just ignored. So
they will get ignored forever, like if it's detected that the node is dishonest or not dishonest?
Well, as long as the majority of nodes acts honestly, the system works. If big player comes with a lot of hash power, it's kind of difficult to know that he's dishonest. You just accept the chain that used the most computing power. So, sorry, what?
So because you said that this player would have to buy all of that this at the same time, would start doing it all at the same time. But if he gradually starts using those faulty, making those faulty transactions, then over time, then at first they would get rejected, but if once he gets 51%, then suddenly everyone will accept that, right?
Yeah.
Like just
In
because
theory, I
previously-
mean, you know how difficult it is.
Of course, yeah.
I think during that time, the network, the news, the people will figure out one way or another that something is wrong here.
Yeah.
But in theory,
other
let's
agents
say I
can
can
buy
do
it.
that pretty quickly, neatly, and secretly. They will not. I will just accept the transaction that comes from the largest pool of CPU, which is the attacker. That's the point.
I think you have to.
Sorry.
You have to add to the cost of the attack, actually, purchase of the Bitcoin, because even if you have all this power, you cannot do anything apart of censoring. Because if you want to steal from somebody, first you have to have a lot of Bitcoins. For example, let's say 100 billion worth of Bitcoin, buy some, I don't know, aircraft carriers or something like that, have it delivered, and then unwind the transaction. Yeah. So you would have to, a part of that, purchase all this Bitcoin in the first place to be able to spend it and then undo the transaction.
I mean,
Even though you all this
Bitcoin,
power, you cannot just take somebody else's money. You can only spend your money twice. That's the only thing you can do with all this power.
Yes, I actually didn't mention it, but even if you do all that, it's pretty limited what you can do actually. You can try to do what we call a double spend. So you would spend probably a large amount of money. Maybe you get a service out of it, and in the next block
Gets frozen.
you cannot
spend it
reverse
back
the
again to yourself.
transaction.
Yeah.
You send it back to yourself, or you mine secretly a side chain that will actually never contain this transaction. So you kind of lure the recipient that he's on the chain that will be accepted, but secretly you mine one with your 51% a little bit faster, and it's always the longest chain that is accepted by the network. So yeah, you can play with reversing your transaction or make a transaction looks real while it's not. Once you do that, but even
Is
though
that the big hacks that we've heard about that
Mhm.
happened?
What?
There was the hacks that have happened?
yes,
That
actually,
Bitcoin
so
was-
Bitcoin
So-
never got hacked.
No, not Bitcoin, just generally.
Many
blockchain.
other blockchain got hacked and were victim of 50% attack. Even
Is it the same logic though? It's that they were
yes.
able to get the
Yes.
51%.
I'm talking about Bitcoin, but most of things that I'm talking here apply to blockchain. But the proof, that's why the proof of work mechanism is also so powerful. And most of other blockchains actually use another mechanism, that is proof of stake, which you don't risk your energy, but you risk your actually native asset of the blockchain. So you kind of put it and you might lose it if you act dishonestly. Here, if you act dishonestly, what happens is you lose all this energy all this time, you get penalized, right? If you don't manage to. So that's the incentive mechanism. You get punished by the protocol because you just spend energy for nothing, and you get rewarded by the protocol if you act honestly and you mine. So yeah, but yeah, other blockchain, and I think when Ethereum was on a proof of work, I think there was a 51% attack. But yeah, I'm not studying too much all the others.
So blockchain as a technology doesn't operate consistently across different protocols. Is that it? Is that it can be applied?
A lot-
The protocol will determine how
Yeah.
exactly it operates.
A lot of them are closely inspired from Bitcoin, like there are literally copies of Bitcoin, but something will change. A rule, size of the block, maybe you can make more transaction because the block is kind of larger, but at the expense of centralization. But yeah, then it's infinite how you can play with this blockchain and change the rule. But in all blockchain, you have this chain of block. You have to have decentralization and a consensus mechanism. That's kind of the basis. But then, of course, it's maybe I should have mentioned earlier. It's a spectrum. So you have blockchains that are completely decentralized and distributed. That's Bitcoin. That's the mostly decentralized. And then you can have a little less decentralized, like Ethereum, where you have a foundation, a guy who. And then you have a more and more centralized, and then you have like XRP or some pseudo decentralized blockchain. Yeah, the basis is like you have blockchain, you have a way to synchronize the data among all nodes, so you have decentralization of this blockchain, and then you have to deliver a proof of something, like a kind of voting mechanism. Either you put energy and work, which is believed for Bitcoin to be the most relevant and robust thing because it's attached to the physical world, or you put some asset you have a proof of some asset that you might lose eventually if you act dishonestly. So it's all a question of incentives. And here, even if you manage to do that, you will have like really little incentive to actually break the network. You couldn't actually break the network so easily, and you might actually gain much more if you just mine honestly with all this power.
But that's a question of volume with Bitcoin, right? So like if governments start using blockchain for contract law or something like that, if there's less volume, does it make it more susceptible to hacking? If the technology?
Yeah, if there is
Because those
whenever there is more centralization or doesn't require proof of work, it's more susceptible to be hacked. Yeah. That's why Bitcoin is a more secure blockchain ever. Okay, let's see. Okay. Do you want to hear about what this hashing is? We always talk about the hashing and I think it's very important because this hash rate, this function is a calculation that is done many times. It's the only one that is done. And the hash function is at the base of cryptography, and it's used all over the place in blockchain. So I think we don't need to know exactly the content of the hash function, how it works inside. Myself, I never really studied it. I'm pretty sure even miners who use this hash function don't really know how it works, but they know what are the properties. And I think because it's used for digital signature, for mining, for attaching blocks, as we said, together, and for other things, for managing and compressing data, I think it's worth to actually go through one time to understand maybe just the properties of it. Okay, so it's a little bit technical. I hope it's not too boring, but let's go through it. To take 5 minutes, and then we'll do something funnier, hopefully. So the hash function is a computing function, math function that takes any data, any size, could be an encyclopedia, an image, a word, a dot, a zero, but it will always, in a deterministic fashion, output a number of fixed lengths that is kind of random. It's very fast to compute, and it's a one-way function. So if I have this output, I can never determine what was the input that produced this output. This function is so interlooped that I cannot kind of reverse engineer and know that, this number was produced by hello. I need to actually take hello, do the computation, and seeing that it's actually producing that number, one way. Then there is what we call avalanche effect, which we call the butterfly effect, because I find it more beautiful, which is the fact that if you just change one bit, a little bit of data, the output number will be completely different, unpredictable. Collision resistant means if I have different input, I'm sure as shit that I will have different outputs. Actually, there is a probability, but it's still considered so improbable to have same output for two different inputs that is considered a property. As I said, the output is of fixed size always, so it's good to get an ID of a block. It's always a fixed size, like a zip code, and it's random in the sense that if I change the input, the number that I will get at each place, I will have a different thing that will be random. And if I change the input, I will not have more probability to get some character at the beginning or more. They will always change as I change my input. Okay? And the hash function that is used in the Bitcoin blockchain is called SHA-256. Why? Because it's the length, the fixed length of the output. I'm not sure what it's called, SHA, but it's the one. And I think it's important because if a hacker could reverse engineer that, it could basically compromise the whole blockchain. But the interesting part actually is that there is no formal proof that it's impossible to reverse, to find the input for a given output. It just never been done or achieved. So we suppose it cannot. If it could one day, then it would be a big problem.
Do supercomputers pose a problem?
Yeah, they say so. Yeah. But still a small probability, and we can always change this hash function to another one. So yeah. But what's that? I just imagine a two-way function. So if I just have a function that multiplies my number by 2, if I run 12, I get 24. If I run few of them, I will see that 3 gives 6, 10 gives 20, and I can infer based on this logic that if I don't see the input, I can probably infer that if I divide my number, I will get the input. So that's an example of a two-way function. One function is times 2, the other way is divide by 2, which is not the case with the hashing function. Okay, we often see those addresses or those hash with some letters inside. So I just wanted to make it kind of clear for you where we have some letters. It's actually just an encoding thing. So we are used to counting base 10, so from 0 to 9, then we start to use 2 symbols. Then we have binary system, that's the one that is understood by the computer. So 0 is 0, 1 is 1, but 2 is already 1, 0, or 10. That's, and the hexadecimal is kind of semi-computer, semi-human. It's just that we use 16 symbols. So once we arrive at 9, 10 will be A, 11 will be B, until 15. So you have the 16 symbols. And the thing is, each of the symbols corresponds to, for the computer, to 4 symbols. So one is, so if I allocate like 4 digits for a number, then one is 1 with 3 leading 0, 2 is 10 with 2 leading zeros, and so on. Okay, so that's one hash example. For example, 256 bits. It's a random number. 11111 would be an extremely large number. So the number of possibilities are unimaginable. It's a huge number of possibilities. I think more than the number of atoms in the visible universe. And just to make the same number in hexadecimal, because I have more symbol, I can also compress basically 4 times. I can use 4 times less symbols, right? So I just have to group by 4 my digit. If I have 0, 1, 1, 0, I'll get 6. I have 10, 10, 10, 10, based on this table. 8, etc. So that's one hash, and basically that's what the miners do. And I wanted to show you also how it works. This little demo. So it's a little bit more intuitive for you. Okay. So I said it takes any data. Blah blah. I don't know if you guys see something. Maybe I can make it a little bit larger. Hello. The name. So you see, that's my data, and that's the hash. If I change only one dot or something, you can see that at each character change completely in a completely random thing, random way, and super fast, right? And it can take potentially a huge amount of data, whatever, right? So here I'm just on an internet site. Okay. So of course, we don't believe anybody in the Bitcoin. So what I did is I will open the terminal and I will just create a little variable with this exact same text here, kind of random text, and I will use a library to compute the hash. And let's see what I get. Okay, I printed this hash, and let's see if I have the same here. Yeah, it matches exactly, so it looks good. So the fact that it's computing fast is quite important. And now let's say we are in a block. So I create a block, and in a block I will have some transactions. So I'll have transaction 1, Victor sends, I don't know, 1 BTC to Alice, then I will probably have another transaction. Alice sends some, not some, it's 0.003 Bitcoin to Bob. Let's say I have 2 transactions in the block, and the miner will hash that, and we get a hash. And what happens is now it's the consensus mechanism. So it's the rule that people will follow based on incentives, and the rule states that I need to find a specific hash. Here it becomes red because the hash is wrong, and the way the protocol imposes that is to put constraint on this number, and the way he does this is that it imposes some leading 0 at the beginning. So here I see that I have 6, 6. You remember, leading 0 means small numbers basically, because I go from left to right. If I have some 0 here, imagine I have just 1, 2, 3, 10, or C, A here. It's a small number, so the more I have leading 0, the smaller is the number. That means I have to basically have a hash that is a number that is smaller than a given number, which we call a target difficulty. So, of course, I don't want to mess with my data to create other hashes. Right? So how do I create another hash? In the header of the block, I have a special number that is called the nonce. That's, I see people, it's too technical. But yeah, don't worry. The nonce is just, it's called nonce because it's number used only once, and and this is just for this purpose. So I can just literally iterate. I can try 1, I can try 2, I can try 3. I can try any number, and it will not change my content, but it will change the hash, because you remember this property of the hash changing completely when I change whatever bit of information. So the miners will just iterate 1, 2, 3, 4, 5 with this nonce until he gets a hash that is valid. So now I simulate the thing and poof! Now I know that if I hash this data, I find a hash with 4 leading zeros, and now I have a valid hash because it has a certain amount of leading zeros. And now the nonce becomes the proof of work that this block, for this block, that this block is valid and requires the proof of work, and it can be proposed to the network. Okay.
Why
So here,
4 zeros? Why are there 4 zeros?
why 4 exactly?
Yeah.
So that's a good question. Actually, there is something called the difficulty adjustment, and this number of 0 depends on the global hash rate of the network. So that's, and it's automatically adjusted. That's a pretty smart thing that Satoshi did, is that if there is more miners on the networks, the block will arrive a little bit faster, but since there are timestamps on the blocks, we can estimate how frequently the new blocks are added. If there is more hash rate, they will come more frequently, and the there is a function in the Bitcoin software that will add 1 0 more, and if you add 1 0 more, you basically no, if you remove 1 0, sorry, you basically increase the difficulty. Okay. So the more you have 0, the smaller is this number. I mean, the lesser character there is, and the less probability you have to choose it. No, so the more leading 0 you have, the more difficult it is to find the number that satisfies. Yeah, it adds more constraints, basically.
So
Okay.
this is supposed to somehow protect from fraud? Or
Sorry?
so this is somehow supposed to protect the network from faking transactions? Because you said this is the proof of work.
Yes. Then once you did the proof of work, so miners will all do that and will try to find the proof of work, but only one will find it first, and this one will propose the block to all other nodes, and now other nodes can say, this guy has done the proof of work, good, let's add that block, and now everyone added the block, so everyone stopped working on this particular block and work on the next block from scratch, and then someone else find the block, etc. So that's how it works.
Did I understand that correctly?
So
Yes.
there was just a question there. And then,
But what if miner correctly work and find the right number which fulfill this condition for a number of leading zeros, but the content of the block is corrupted, so the miner put their own transactions which were not real.
That's an interesting question, because we have the miners, which are mining nodes, but then you have other nodes that are called full nodes, and those are like validating nodes. So once the block is proposed, the miner, when he has done the proof of work, he just earned the ability to propose a block. It doesn't mean it will be accepted. It needs to be valid, and more than that, every transaction inside needs to be valid. It needs to be checked if the balance are correct based on previous transaction and all. And those are all the nodes that do not necessarily mine, or called full nodes. They just hold the blockchain locally, and they accept or reject the block. So there is a validation. So it's this nice balance of power, actually, where miners actually just provide security and the computing power, but the security comes from actually the validation of the nodes, of non-mining nodes, actually. Okay? So those are the ones who have the power, the non-mining nodes, not the mining nodes. Okay? So it's not yet in the blockchain when it's mined. Yeah, it needs to be approved by all nodes, but basically, when there is a proof of work like that, then if the content is correct, then it's validated. You had a question?
Yes, I'm not sure if I understood it correctly. So you basically guessed the nouns,
Yeah.
the 6-digit code, and then
Yep.
let's created the correct hash.
Here I have
That's
6
not
digits,
very probable. That's pretty improbable.
but improbable.
It doesn't seem possible. You guess a 6-digit number, and with that you.
It's very hard. You have to, like here, it's a simulation with only 4 leading zeros. But if I add more leading zeros, then I will probably need to mine for a longer time, and we will do the actual exercise now, if you will, and I think it will be cool. You can actually go to this website. I will send the link on the group. If you have your phone, so you can play the game. So here you can actually, it's a site where you can choose a number of dice and you can run them basically. So because it's not predictable, each of these symbols, remember I have 16 symbols at each place. So because it's pseudo random, each place is like rolling a dice with 16 faces basically, and I do it 64 times, right? Because this is the length, the fixed length of the thing. So we can simulate that just by rolling dice, okay? So I suggest we take, on the second part here, a little bit lower, we can take 10 sides of the dice. In hexadecimal it's 16, but and we can take four dice, for example. And now, do you have this on your phone? So we can, so we simulate basically that you are a miner, you're a mining node, and I would be representing the network, okay? All those validating node, if you will. So now you can start. Everyone can start and stop at some point and get this random fixed length number, which has 4 space and 10 possibility at each 4 location. But now I need to put a constraint, right? I could put a leading 0, but let's say that you win a reward because once the block is added, the one that found the proof of work gets rewarded and gets a new coin, basically. Gets some Bitcoin. And let's say that instead of leading 0, I put a number that should be less than 5. Okay? And I will work on it. So let's do this game and see who is winning first. I'm winning first, but I'm the network. I'm just telling you how to do. Do you do it? So who is playing the game? You?
What is the website again?
I send it on the
WhatsApp group.
on the WhatsApp group.
I see.
You see it? Yes, here. It's calculator.net. I think you can. You can also access it via this QR code. Let's do a few minutes, 2-minute play, and then I think we're tired, so we can have a drink later. Okay, so how many miners do we have? 1, 2, 3, 4, 5. You do? 6? Okay. So if we do this, so you just have to set 10 sides of the dice and 4 dice. And then you just keep start and stop and see if you found the first digit that is first symbol that is less than 5, and then you get a reward. You have some candies here.
I've got 2.
You got 2?
Yeah.
Okay. You get the reward.
Thanks.
So nobody stops. It's a never ending process. Then the next block gets mined.
And if we have, when do we win? If we have all the numbers? Or if
No,
we
you
have
win
to-
when you have the first number that is less than 5.
Okay.
You got it?
Yeah, I got it.
Okay, but you got it first.
Yeah,
So
yeah.
let's count. 2, 3, 1, 3. Yeah, we need to check the proof of work. It's good, so you get the reward. And now it's go on. Okay. And if it's too hard, like now maybe it's too hard, the network will adjust. And now let's say the first digit should be less than 7. You got it? Okay. You know, you get the chewing gum. Okay, and go on and go on. Normally, if more people play the game, there is more hash rate, computing power, so someone win the right number more often. And then it becomes too easy. So we can say, for example, that the 2 first should be less than 5, for example. And then suddenly the difficulty is harder. And this is how the network kind of keep mining, keep doing it, yeah. I'm talking, but
I have 2 to 1.
you have 2 to 1, so
2 1
still have some reward. 2 to 1.
2 1 5 5.
So you started with 2, it's okay. So that's how the difficulty adjusts, and so that we always keep in average 1 block every 10 minutes. Okay? And this is how it works. Okay? Okay, so so I think it was, I had some quizzes here, but maybe we can leave it for next time, because it's been like 2 hours long. Okay, I hope you learned something useful. Thank you for coming. I will put the recording somewhere in the group or whatever. I think we can do some Q&A. We might not need to record. Low battery.